Good morning. Actually, it's close to noon. Today is April 19. The time right now, Singapore is 11:52 in the morning, 8 minutes to noon. And now let's do a recap on what actually happens on Wall Street. We have a bit of a mixed market in equity. We can see that the Dow Jones did not register any new high for this week itself. The high that we saw on the screen here is the Dow Jones 4 hours time frame chart. 34,082.9 was a high traded last Friday. Since then, we do not have a new high, and market is basically right now in the midst of earning season for first quarter. So it's a bit of a mixed bag here. We have some companies that do okay, some that less than ideal. So we have a bit of a mixed bag here. However, the upside potential in the Dow Jones to me is actually pretty limited. I think there is still a possibility the market may actually go higher to 34,406. This is my target right now. I do not believe the market can take up 34,712. So that represents an area in which if the market stalls anywhere upward of 34,500, I think the market is very vulnerable to a sell-off. Okay, so do watch out for a potential reversal in equity prices. Now we can see the S&P 500 managed to actually climb into a new high since the mid of March here. We have a high of 4,169.5, and this is smack in the region in which I think the market is vulnerable to selling pressure here. This area is 4,140 to 4,194 levels. Okay, and this is not far away from the February high of 4,195. So we are very, very close to the year's high so far. And whether it can exceed this level remains to be seen. Even if it exceeds, but if it cannot close beyond this on a daily basis, I think it is also prime. It is also vulnerable to a profit taking. So do watch out. Okay. The only exception here is of course the Nasdaq 100, which has been exceptionally resilient this year, unlike what we saw last year, in which nobody won any tech stocks. So we can see that the Nasdaq 100 remains very, very, very resilient. Although it did not have a new high last night, but it was very, very close. You can see that the high traded last Tuesday was 13,204, and yesterday's highs were 13,000, just under 200. So it's very marginal, but it did not quite manage to hang on to its gain, and before it come under selling pressure towards the second half of the evening itself. So we can see that, yeah, based on this structure, it does look like this Nasdaq 100 does have a little bit more room to go. Predominantly, I think this market has a potential to even go up above to 14,000. Okay, my area of opportunity is likely to be within the range of 14,135 to 14,710. Okay, this I think is possibly a target area in which a market in the Nasdaq 100 may actually eventually rise up to. But again, relatively speaking, I'm not going to chase this market much higher. It's getting to be a little bit hairy for me. So we look in Asia. Asia this morning, we have the Nikkei 225 challenging the March 9 high of 28,734.8. Okay, we have a high traded at 28,000, just under 700 before the market loses nerve and start to come back down. But this is very nice. You can see there's a three-wave rebound, challenging most recent high, fail, at least for now. If it cannot actually climb beyond 28,735, okay, I think the market is quite vulnerable to the downside. If it does, the nearest support is somewhere around 27,430. So this is going to be quite a bit of a drop here. So we'll see what happens. In fact, I think this market may even go all the way below 26,630. So I'm definitely a lot more bearish in the Nikkei 225. Okay, so avoid the Hang Seng. The Hang Seng actually have managed to rebound yesterday into a marginal high at 20,864.7 on the back of very positive number released in China yesterday for the GDP for Q1 2023. It was beyond market expectation, but what is the kicker was actually the retail sales. Retail sales came in very, very strongly last month, in excess of 10%, okay, from where it was 2%. So we can see that there was a big bump up in the retail sales number that actually supported the what I call the red chips. Okay, so we can see that Hang Seng actually managed to go to 20,864.7, but again he has stopped. Today we have no follow-through buying so far, at least not now. Okay, so this is an area is also previously I did mention an area vulnerable to selling interest. The area is 20,800 to 21,100 levels. So we do see the first attempt to trade into this barrier of prices has met with resistance. and we'll see what happens. Nearby support is about 19,885. So we will see whether it can actually hold. If it cannot hold, then the market has a potential to actually slide all the way to go down to 17,400. Okay, we will see what happens next. Over in China, of course, the mainland index has actually benefited from the stronger than expected GDP numbers released yesterday. It went up to 4,169.45. But today we have not seen any follow through. We would love to see follow through because it's a set of numbers that should underpin this market, because the GDP is a reflection of the economic expansion in China since the end of the lockdown that we saw end of 2022. So that should actually cause the market to go even much higher than what we are seeing right now. So not sure why we have not seen follow through buying. Maybe because the global economy is not in the best place right now. There is always that lingering fear that the global recession is coming, and if that is the case, it will also impact Chinese economy as well. We will see what happens next. Okay, over in energy markets, we can see that energy market price of crude oil actually dropped to $80.67, which is a bonus because I've been waiting for the pullback, and right now the market is pulled back to this area, which is actually very ideal for buying. I have a catchment area between $80.40 to $80.70. So the market has gone into this bracket of prices, which I deem to be very, very ideal for buying, to actually to buy here. But I'm still waiting for the confirmation in a lower time frame. What I'm trying to look for here is actually a reversal pattern in, let's say, a candlestick that tells me the buying has actually started. Right now, of course, we are 2 hours before the London market opens. We will see what happens in London in the afternoon, whether we see buying interest comes in. If it does comes in the form of a short-term reversal pattern in the candlestick, then I think that will be the confirmation that I need, and that will actually increase my odds of success if I buy within this bracket of prices. So again, this is the long-term outlook here. You can actually consider this. Now over in the gold market, we can see that gold have quite a bit of a sharp pullback last Friday from a high of $2,048.80 all the way to $1,981.30. So this is a very, very sharp drop. And then from this week onwards, you can see that there's a bit of a rebound. We can see there's in the 1 hour time frame, you can see there's likely to be one three-wave rally here, which is a corrective rally. So if that's the case, I'm waiting to sell gold in the short term. Okay, I'm bullish gold in the long term, but I'm bearish gold in the short term. I think there's the area of opportunity may arise from $2,016 to $2,021.80. Let's see what happens in the market if it goes into this bracket of prices. If we have evidence of selling interest coming out, then maybe this is a good area to sell. There are two possible targets here. One is to retest the $1,981 level, which you have seen last week, and then the other one, more deeper correction, will be where it all started. This is the the A, B, C, D, E. Okay, this is the E move here, and I think the market may go back to where it started at 1,949. Okay, so do watch out for 1,950 levels. This will be a much deeper correction, so that may see market do this all the way from now all the way into May. Okay, so I do see a deep pullback in gold prices. It may not happen so steep, but I think there is a potential for the market to grind much, much lower. Okay, so over in the silver market, we did see a pullback to $24.81, and I do have the a lingering fear that this is only the beginning of a more substantial pullback. We will see what happens, and the market can actually go back up to test somewhere near this level, which you saw that there's a rebound to $25.60. Then I think that would be a good level to consider selling, for the market to actually test at the bare minimum $24.63. Okay, if we see a much deeper corrective pullback, maybe the next target is $22.83. Although this possibility is not very, very high for the time being, I think realistically speaking, I think at least for now, we can see a more realistic target at $24.63. Okay, over in the dollar index, we can see dollar continues to maintain he has not lost back a lot of ground since its rebound. We can see that the dollar index has hit a high in mid-March last month of a 105.87, and then it unfolds in a five-way 1, 2, 3, 4, 5 pullback here with a low of 100.42, and the market saw a rebound. Now this rebound could be the start of a corrective rebound, and we are probably only seeing the first leg of a three-wave rebound. This is A, and what we are seeing from 101.93 could be a B wave. Ideally, it should end somewhere between 101 even to 101.20 levels. And if it is the case, we will see a buying interest coming back here. There could be a continuation of this rebound all the way to challenge 102.50 levels. So this could be a short-term play. For those who are interested, this could be a buying area. I am definitely looking to buy. Okay, I've already bought. I'm going to buy some more. Okay, over in the sterling have a different setup altogether. The entire rise from 1.18 to 125.45 doesn't look to be complete, and so far we have seen there's some kind of support at this pivot point at 123.40 levels. Okay, we can see first attempt 123.44, 123.53. So we can see collectively we can see that there is a bit of a support around this area. So the market actually rebound from here. So if you are very aggressive, you can consider continuing to buy, because I think there is a possibility market may challenge 125.45 one more time. Okay, so this is a little bit different from the other currency pairs. But I think sterling do have a little bit of momentum left, and the area of interest for me, if you are going to be very aggressive, which I'm not, okay, to buy a 123.90 to 124 levels, which is in this 10 pip area. This could be an area of opportunity, because in the short term, let me show you the 1 hour. In the 1 hour time frame, we do see a bit of a three-wave pullback. Okay, very small. Okay, let me see. A very small pullback. Okay, if we have a pullback here, then possibly we could see something like a pullback into this area, what I call the 123.90 to 124 even levels. Okay, somewhere between here, I think you should find support, and then the market may actually rally to take out 125.45 all the way to maybe as high as 127 thereabout. My immediate target is 126.60. Honestly, okay, this horizontal red line here. Now over in the euro versus the dollar, we do see continued weakness coming in. We can see that, okay, this market has actually peaked last Friday at 110.75 and go down all the way to 109.09 before it started to rebound. The highest traded as of this morning is 109.80. 84. So I think this market may actually extend a bit deeper into this bracket of prices, ideally into 1.0. Oh, so this is not 0, this is actually 1. Okay. 1.0990 to 1.1010. Okay, so this could be an area of opportunity to look for selling interest, because I think the market has a potential to break this immediate support line here. Okay, this support line originates all the way back in in March 24. Okay, so we can see that this is a medium-term support line. I think there's a possibility it may break here and actually head toward 108.30 levels. Okay, so there's a possibility here. So in the Aussie, the market is a little bit corrective, although it is not very clear which way it's going to go, because it has been locked in a very corrective manner for quite some time now. So there is, in the medium term, for those who still want to get into Aussie dollars, it probably will be a buying opportunity rather than a selling opportunity. If there's a problem, the market may have already bottoms out this morning. Okay, I have a target here between 0.6706 to 1. Again, this is not 1, this is 0. So sorry. Sometimes the labeling can get a little bit confusing. Okay, let me relabel this as 0. Okay, 0.6707 to 0.6714, very small, maybe a 10 pip bracket here. But this morning we have a low of 0.6715, so maybe the bottom is already in place. If that's the case, market may actually zoom past 0.6805 all the way into this bracket of prices, which will put it very vulnerable to the downside, to 0.6850 to 0.69 even. So again, if you are, for those adventurers who wants to buy Aussie, this could be one area of opportunity, although there's a likelihood that bottom may already be in place. Okay, so there's no ideal entry price at this current moment. Now, the other one that is actually more interesting to me is actually the dollar versus the yen. Now, the dollar versus the yen, you can see the corrective pattern in which the dollar is rebounding is actually very corrective. Now, if you look at this low here, 139.64, all the way to 133.75, then a pullback to 130.63. This could be forming the first leg of a three-wave rally, which may terminate somewhere between 134.75 to all the way to maybe 136.24. So this is a very wide bracket. But when I do this three-wave extension and a three-way extension here, there's an overlaps of two prices. Okay, one is the 100% extension of this move from 130.63 to this level is 134, and then pull back to 132. And then this will be the three-way extension to 135.45. This is the bottom end of this move here. And then when we do a larger degree three-way extension, the 1.26 extension, 1.236 extension is actually at 135.72. So taken into consideration, I think this bracket of prices 135.44 to 135.72 is an area where I think it will be most vulnerable, in which if there's going to be another run-up in prices, this will be an area of opportunity. I'm basically long at 132.20 levels. I want to see if I can take profit at 135.45. Now, before today, I was actually quite happy to take profit at 134.75. But yesterday, the market actually dropped short of my price. Now, on hindsight, it's not a bad thing because now after seeing this move, I have decided that maybe the market is not done rising yet. Maybe another chance market will go and challenge the 135 levels. Okay, so this is my take profit levels, and maybe if I can see a confirmation of a reversal here, I may actually go short the dollar versus the yen. Okay, over the dollar versus Canadian, we also see a bit of a rebound in the 4 hours time frame, but this 4 hours have already completed its first three-wave rally, and possibly this could be forming a larger degree three-way bounce. And if this is the case, I think the market may actually extend higher. Top side maybe 134.80 to 134.90 levels. That about could be the target. Okay. When you look at cryptocurrencies, we can see that Bitcoin has maintained a very positive outlook. The high traded last week on Friday was 31,034.35. Then we see a bit of a pullback to 29,122, and then it started to rebound back to as high as 30,483, which is yesterday's high. Okay, so based on this structure, there's a possibility market has already bottomed at 29,122. But if the market should pull back one more time, ideally that is the case, then we may have another better entry price. Now I have two places in which I'm looking for buying. Okay, one area is 28,645 to 29,000. Okay, this could be one area of opportunity because it means this is exactly the ABC move, inequality move. Okay, a deeper pullback. Okay, is here. I'm sorry, this equality move ideally should brings the market much lower. The target price is 28,120 to 28,570. This will be an equality move. However, this area that I mentioned between 28,645 to 29,000 is a 50% pullback to the 61.8% pullback from the low here at 27,236 all the way to 31,435. So between these two bracket of prices, ideally we can find a bottom, assuming the market has not already bottomed. So if there's going to be another pullback, that could be a buying opportunity. Market may actually take out the 31,000 levels to go as high as 33 to 34,000 for all we know. Okay, so my immediate target here, there's just under 33,000. I think could be my immediate target for this move if there's going to be a chance for me to buy. Okay, so that's all I have for you for today. We will see what happens tomorrow. In the meantime, take care. Bye bye.